Our next guest says buckle up. Investor fears and correction pressures are likely to intensify at least until bond yields find a sustainable bottom. Joining us right now is Jim Paulsen. He's chief investment strategist for the Leuthold Group. And Jim, this morning we are seeing even more pressure on those yields. The 10-year fell to its lowest level since February 12th. The 5-year hit its lowest level since March 2nd. So what's happening here? And why do you think that we're not going to see this shake out until we find those bottoms?
Well, I think in recent weeks, bond yields been falling, and people have been wondering, what does the bond market know that we don't? Its anxieties have been growing as a result of that. And then last week, the bond yield 10-year went to 125 and rallied off that, Becky. And I think what we've done here in the last couple of days is retest that low, and it failed. So I'm not so sure this thing is entirely over. I think the bond market is driving everything. When yields have gone down, it's starting to connote that maybe COVID is a problem again, and that's running through all markets. Not only the stock market's down, but the most economically sensitive areas are getting hit the hardest, small caps, cyclicals. The dollar's up on a safe haven bid. As yields fall, the commodity prices have rolled over. As Mike Santoli pointed out, jug spreads have weakened off. So everything in the financial markets connotes weak economic growth coming. I don't think that's going to be right necessarily, but until that bond yield can find a low that looks sustainable and bounces off it, I think all those markets are still at risk. And I don't know when that'll be. I do think the fundamental backdrop here is very good. I mean, we're still growing at very strong rates, both in the economy and earnings, and I think that's ultimately going to win out. So I would say this is more of an opportunity to take on more cyclicality if you don't have it than it is a bull ender. But I'm not so sure, maybe yields have to go lower before they find a low yet as COVID information worsens here than we said. I don't really know. I think it's still not, to me, over necessarily.
Shepard Smith here. Thanks for watching CNBC on YouTube.